The rebound in the markets that we've seen since Christmas Eve has now put us back into the trading range that we were in for most of 2018. Now we're about to find out if this is a true market rally or if this is what some analysts refer to as a dead cat bounce.
The S&P 500 and the Dow Jones led the way this week, with both of those indexes up just under 3%. The Nasdaq's up almost 8% for the year, and the Russell 2000 is leading the way so far in 2019, up just under 10%. Foreign and emerging market stocks also had a strong week, with foreign stocks up about 1.7%, while emerging market stocks were up just over 2%. Now, foreign and emerging market stocks are both up over 5% already year to date. So today I want to do things a little bit different and cover all four of the major US indexes that I cover whenever I go over the returns portion of this video. First off, I'm going to talk about the S&P 500, which consists of 500 of the largest US companies. Looking at the far right of the chart, you can see the market sell-off that happened towards the end of the year, and then the bounce that happened right around Christmas time into today. Now what happened during this bounce is we got right back into the blue box, which is the trading range that the S&P 500 has been in for most of 2018. Now what we're paying attention to here is the bottom line of the blue box. This is an important level that we want to hold for this rally to continue. Next is a chart of the Dow Jones, which is the 30 largest companies in the United States. And this chart looks almost identical to the chart of the S&P 500. Again, if you look towards the far right of this chart, you can see that the market bounced towards the end of last year, and now in the bottom right corner of this trading range. Now we're looking at a chart of the Nasdaq, which consists mostly of US-based technology companies. Now looking at this chart looks very similar to the last two, where we're currently at the bottom right corner of the blue box, which is the current trading range. And the Nasdaq was actually the first one of the major US indices to get back into this trading range. Lastly, we're looking at a chart of the Russell 2000. And the Russell 2000 consists of small cap companies that are US based, and these are probably mostly companies that you've never heard of. So not to sound repetitive, but the Russell 2000 is now in the same spot as the other three, the bottom right hand corner of the blue box. Now the Russell 2000 was the last one to enter into this blue box, but as we said before, now all four of the major US indices that we talk about on a weekly basis are now in the blue box, back into the trading range from 2018. The reason we wanted to touch on all four of these charts at the same time was because each of these US indexes fell together at the end of 2018, but also bounced from Christmas until now. So the blue line on each one of the charts at the bottom of the blue box is an important level for all these indexes, and that's a level that needs to be held for this market rally to continue.
Last week's news began with the United States and China making progress towards a trade deal, with China agreeing to reduce the trade surplus that they have currently down to zero by the year 2024. But there are rumors that there is arguments as to what happens to Chinese companies if they have theft of intellectual property from American companies. Next, over the weekend, Theresa May released her Plan B for the UK to leave the European Union, aka Brexit, since Plan A went to a vote and failed miserably. Now, it is noted that on March 29th of 2019, the UK is scheduled to leave the European Union, so time for negotiation is now, as time is running out. Also over the weekend, the IMF, or International Monetary Fund, revised their global forecast for growth over the next 2 years. And as projected earlier, they actually revised global growth to be down from where they thought it would be. And they also noted that due to trade fears and also a possible slowdown in Europe, that we could see a possible sharp decline in global growth in the near future. So now we have both the Fed and the IMF voicing their concerns about a possible global slowdown.
And it's also worth noting that the market started off strong last year at this same time before there was a large sell-off in February. So there's still reason to be cautious.
Thanks for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Like our Facebook page and share the video. Thanks.